Hey traders, this is Christian from Tribeca Trade Group, and it is Friday, February 26th. So end of week, end of month. Kind of a crazy month, February. Well, for a lot of reasons, but because we are actually done with the month. It's weird. It's the 26th, and we're at the end of the month. February obviously only has 28 days, and today's Friday, so Sunday will be the 28th, and Monday will start on the 1st of the month. Again, kind of weird, but it is what it is. And yeah, I mean, I would say as well, kind of a weird month for the market. So let's talk about some of that. Well, first of all, we'll talk a little bit about today, and I wanted to start with the message that I think this month and this week was pretty good trader education. I put this statement on Twitter. I also talked about it in the Tribeca Trade Group trading room that, this is really where you learn to become a better trader. And I know that that's tough because, we're all in this to make money, right? We want to profit and we want to prosper and do well. But one of the things too that helps you over time do those two things, make money, prosper, and so forth, is to become a better trader, right? And I've seen this for a number of months, and basically since January, not January, since November when we really kind of kicked higher, and then for a good number of months just continued. And there became just what we've got very regular tuned into was a lot of victory laps by a lot of people. You know, a heavy speculation in a lot of areas of the market. Some of the biggest speculation that I've ever seen. And again, I've traded all the way back since a little bit before the year 2000. So, and so I've gone through some interesting times in the market. So yeah, I mean, this last couple of months of speculation is crazy, and I think that we all, with realistic assumptions, realized that the market was going to correct a little bit and have some type of a pullback here and there. And overall, I think it's actually kind of good for the market, right? What becomes dangerous is when we do have all that heavy speculation, and there's no check back, right? And we know that we've been in a very higher than usual sediment, right? Sediment has been elevated, for months and months. So it's good to kind of wash some of that out in the market, right? Where everybody, we talked about this week that how much complacency there is in the market. Right? I've been talking about a little bit about the put call ratio. Someone mentioned to me on Twitter, which is completely fair. They're like, well, I don't really like that because it's very noisy. You can't tell if somebody's opening, closing options, and so forth. Yes, there's a lot of noise in it. But one of the things that I've learned about the put call ratio is when we start to kind of have difficult times in the market, right? So if we're looking at this put call ratio, which hasn't updated for today, but I think that the put call ratio, let's see if I have an intraday look. Yeah, I think it was close to zero point 0.9. So when you couple this with the S&P, and keep in mind when I bring this up, right, there's a little bit of a lag here because the Bloomberg reports this T plus one, right? So I don't have the number here, so it's always reported with a lag. But there we go. If you look at some of the places where we've had some pullbacks, what coincides with the turn back higher? Well, one, fear is usually present. Again, it's not 100% of the time, right? There's some false signals here and there, but I can give you some examples, right? Look at this one, right? Look at where the put call ratio was, 0.73, right? That was the little bit of a bottom here, and we moved higher, right? We had it elevated here for a while around zero point 0.6, but that didn't give a turn, not until we really got an elevated level at 0.76. Right? So that's what I'm referring to. This was a little bit of, this worked for this one, even though this was 0.57, which isn't that high. But one of the things that was concerning me yesterday, right, and I was probably, I was definitely more negative because, I really just didn't see that complacency. Like, there's just too much, like, I'll just buy the dip. And if you've studied the market over time, you get much better opportunities when there isn't such complacency in the market, right? I'll give you another example too, a little bit different than the put call ratio. But again, this is just one piece of the puzzle, right? As I explained pre-market, when we're looking at various different indicators and market internals, they're always just one piece of many pieces of the puzzle. So you kind of have to try to put some of the pieces together to formulate an idea. And if some of them are not if parts of the pieces of the puzzle are not adding up, then you kind of back off from taking risk, a little bit. Right. But another example is, one of my favorite follows on Twitter is Helene Meisler, and she puts out great information. I love her, not her column, but I love her column too in Real Money because I read it just about every day. But I love her free posts that she puts out on Saturday for everybody. And one of the things that she does is a market poll, right, about what people think the next 100 points in the S&P are going to do, plus or minus, right? And when we see it get to the negative side, when people are starting to think that the market is going to go down, and that complacency is gone from the market, a lot of times the market snaps back and goes higher, right? So the last couple of weeks of her survey that she does on that Saturday, there's been complacency in the market, right? There's been more people thinking that the market goes up versus down. So again, just another piece of the puzzle, but so I think we've got a decent washout of sentiment. Are we setting up? Is this kind of the can we play for a little bit of a rebound? Is the worst behind us? It's tough. It's tough to make that call, but I do like that I think that the put call ratio, speaking of that, was close to 0.9 today, right? Which is telling me that, hey, we finally got some fear in the market and it could be a turning point. It could be. It's noisy because today's end of month, as I mentioned, and this happened. If we flash back to the end of January, we closed on the absolute lows there. So there's a lot of rebalancing and a lot of orders that are tied to the close. So I'm not really. I know that the candle does not look good for today, but it didn't look very good at the end of January either. So we'll see. What I would be looking for on Monday is for some new money to be put to work, right? I've talked about that. It's never 100%, but usually there is new money that's put to work in the market. Now the question will be, does it get put to work in? If there is new money being added, we don't know that yet. It could be more value. It could be a combination. So we'll see how that goes. One thing that's kind of concerning to me about the new money put to work at the beginning of the month is that I track ETF fund flows every day, and I tweet that out every day. And there is sometimes a little bit of a lag, right? You get the numbers on a day ahead. They're based on the inflows and outflows are based on what's called creations and redemptions, right? Creations are inflows, redemptions are outflows, right? Now that doesn't occur. You don't get the data until the next day, right? So if based on today's market action, right, you have a deadline to call into the issuer by 3:00 that day to do a creation or redemption, and that data shows up. If for today, it would show up on Monday. So a lot of the market action from yesterday may not actually show up until Monday's data because we had heavy volatility at the end of the day, and sometimes the brokers who are doing these executions can't get the creation or redemption called in. Because you have a deadline at 3:00 and the market closes at 4. So we'll see. But the point that I'm trying to make here, the roundabout point that I'm trying to make here is there really wasn't normally when we're seeing a dip in the market or a little bit of a correction, I see a lot of ETF outflows. And I haven't seen that the last 2 weeks. So that's another piece of the puzzle that kind of maybe not exactly fitting in. I think this week there was $14 billion of inflows going into U.S. equity ETFs, which to me, like I said, also feels, let me say it again. That feels to me a lot like complacency too. So we'll see. What I would be looking for on Monday is I would actually want to see a big outflow, which was the result of yesterday's price action. So we'll see. I'll have that data tomorrow, and maybe I'll tweet that out tomorrow. But yeah, this morning when I tweeted this out, I said that's really odd to not see outflows on a week like this, but it is what it is. So yeah, so we've got that 50-day moving average test in the S&P, just like we had at the end of last month. And what I would be looking for is, even if we kind of hold in, we don't necessarily have to have one of these big green candles, but I would just be kind of looking for the market to kind of stabilize a little bit. The VIX did kind of stay elevated for the day. We didn't really get a breakdown in it, and it's about 28. So, if we look at this, I would like to see it move back below 25, right? That would be a step in the right direction. So it's tough to really make a conclusion going into, at the end of the month, what we're going to get. But I will tell you what I'm looking for, and of course I'll tell you what I did in the marketplace. And just to review a little bit of today's price action, right? Again, we kind of got that shake and bake this morning where things looked pretty iffy. And again, it helps to really be positioned kind of light when the market is looking iffy and when the market is moving faster. So the observations from this week, right? And I think that a lot of people maybe came to that conclusion, especially, listen, from all ranges, whether you're a new trader, an intermediate trader, or whether you view yourself as experienced or an expert trader. Once the market starts moving like this, right, faster than normal, number one, and volatility, obviously, the VIX confirming that, right, that we're above 25 in the VIX, right, that is something not to sneeze at, right, that we're close to 30, and we hit 30, we were at 30 this morning, right, in the VIX, right. That should tell you, when we're moving that fast, number one, you don't need the same position size that you needed when the VIX was at a 22, which is basically where it was, around a week ago. So you don't need the same position size, because the faster the market moves, the more that your positions and your P&L is going to fluctuate, right? So toning down position size, and then of course all things that we've been talking about this week, toning down your overall number of positions, and then of course position size, right? Those are some of the things, and I've learned this as a trader over time. When things start to break down like we did, I try to get out of the way. Sometimes my exits are not at the perfect price, but it allows me to counter very quickly. I saw somebody made a comment on my on one of my feeds yesterday that hey, sometimes when he gets really bearish, the market turns, right? And listen, I'm not really bearish. I'm just reacting as I should to the price action. If the price action starts breaking down, I'm cognizant of that and I make adjustments. Why? Because I don't want to give back my gains from what I've accumulated for the year. So, how did I finish for the year? And I tweet out my P&L on, at the end of every month, and I'll wait till probably Saturday or Sunday to tweet it out. But I've tweeted out my trading account P&L every beginning of the month since, for about now 14 consecutive months, right? And you could go through my feed and you could see that I've done so, and I'll do it again this week, right? And it'll be a picture from my trading account. It won't be some made up spreadsheet that some people have a habit of doing. But for the month, I probably finished up just a little bit under 20% for the month, probably up about 18%. And for the year, I'm up about right around 25%, I believe, for the year. So is that wonderful? No. I mean, I could have been a little bit more disciplined and saved some of my gains, but, I'm okay with that. I'm trading every day. I manage a trading room. I spend a lot of time helping people, and I'm not by any means making any excuses, but, I do trade probably a lot more than I would without, managing a trading room. It just is what it is, right? I'm in here 24/7. So that's a situation there. And yeah, I mean, listen, nobody's perfect. We've all had mistakes. Some people have gotten out of this market very clean, and their performance probably reflects that. But I think being up around 25% for the year. What's the performance so far? Which I don't have up, but I will bring up. Let's see where SPY is for the year. All right. So if I bring in the performance, and I like to do it this way, which is manual, but I'm kind of weird like that. 12. So if we do 12/31 and 2020. Oops, that's the wrong date. 12. Oh, now I screwed it up. 12/31/2020. Right. So the S&P is only up 1.7%. So if you look at the right of your screen, you'll see the net change for the year. S&P's up 1.7%. So yeah, I'm up 25% for year to date. I'm doing, like, my goal is to be outperforming the indices. The Qs are flat at this point for the year, right? And IWM probably will be up, what, about 10%? Yeah, it's up 11%. So good, I'm outperforming that as well. All right, so that is the goal, and so far, steady as she goes. But yeah, you could make fun of me if you like, because sometimes I sell positions when we're breaking the 50-day moving average, which is right where price is right now. But I've learned that you have to be disciplined in this market. Nobody has a crystal ball, and nobody knows what the market is going to do from day to day. So above everything else, price action dictates what I do, right? I always have ideas, right? Trade ideas about what I think is going to occur, but I let the price action confirm that for me, right? And if I'm wrong, I'm wrong. And that's just how it goes. And that's how it goes if you've been a trader for a while. Qs are a little bit different here. We did break the 50-day moving average. I would like to see us, we're going to have new value areas, and we'll have a webinar on Monday for members, talking about the MarketWebs, which is the indicator that I have on my screen that I reference all the time. I reference a lot of things about moving averages and the MarketWebs. Those are the two things that I rely on in my technical trading system, right? But the Qs are going to be underneath the 50-day moving average, and they may start the month below value. And really, we're going to want to see them get back inside value for the month. So we'll see how that starts off. IWM is a better looking picture, right? Above value for the month, and may open up right at the bottom of value, right? So this value area will be active on Monday. Remember, this value area, the one that I'm highlighting, is based on February's market action, right? Volume and price. And then obviously time too, which is a month, right, on the daily chart. So we'll have new levels up, important support and resistance levels to watch. So what did I do today, right? And then we'll get to the week's performance too. I went after some quality names, or some names that I thought could see a rebound, right? Well, we talked about bond. Wow, it's been 18 minutes in this video and I haven't talked about bonds. It's a miracle. But hey, we called this pretty well, right? Bonds were up 3.3%. I did not get the whole 3.3%. I didn't think that we would get this strong of a bounce, but we were oversold, right? The RSI was a 17, and I went over this very, very lengthy the last couple days, and yeah, we got the bounce. And this is probably one of the best things that you could see for equities right now, is everybody was talking about, what's happening in bonds and the yields. And, it may have been an overreaction for everybody to talk about it. But if people are making decisions based on that, then, it matters. But here's our virgin point of control takeout, along with being oversold. And that's the reversal on a virgin point of control. We talk about this over and over. So this really kind of helped markets today, and I think it might help a little bit next week too for that big relief bounce. I mean, believe it or not, TLT finished flat for the week, right? And again, it's worthy of the attention that it got, I think, this week. But for the week, they finished flat. So pretty crazy, right? One day up 3.3% gives back took back the whole loss for the week. I wanted to talk about this other virgin point of control, right? That I think was good that this was taken out in the overnight market. So here's a level for you to watch next week in the Qs, because again, the Qs could not really turn the corner here. And again, the 1 hour bar gives me so many little signals, right? So notice that this VPOC, another version point of control, was taken out in the overnight market. Again, I think we talked about this in yesterday's video, and we bounced. However, it's not really a very strong bounce. So we'll have to look for that follow through for next week. And when we do our macro video for members on Sunday, we'll be talking about levels like 313 will be the first level to watch. And then secondly, basically the week's lows, right? That's very easy to watch. If the Qs start to break back below this version point of control, and again, which kind of signals the week's lows, then I think you got to, or at least I will be, running for the hills a little bit with exposure, right? I'll be taking off, extra trades and being defensive, right? And respecting what price is telling me. And that's just how it goes. There's some FDA news that's just coming out. Advisors say J&J COVID vaccine benefits. The benefits outweigh the risks. Well, that's a good thing. We all want that. All right, so that's what I would be watching in the Qs, in the growth area. Here's my trades for the day. Sorry, I lost my train of thought because I saw that I was reading the headline, but I trade a little bit of Etsy today. So yeah, I mean, even though, and I get that there's going to be, there may be a regime change, value versus growth. We talked about that. I've seen a lot of people posting the chart that I've posted this week, IWD versus IWF. I think you heard it here first. That's fine. People should be doing this analysis because I think it's important. But if we go back to IWD versus IWF, growth came back a little bit. So even if this continues to retrace, right? When we look at a 5-year chart, you can see where it could retrace to, right? There will still be some opportunities in growth. They may not just be as abundant as they were. Right, so it'll be something that we have to watch. So, in my opinion, I don't want to go 100% into value, right? And I've talked about now the value rally for over a week, and I position that way. I had some nice trades on RTX, Boeing was a nice trade, a couple other trades that we did in the room too. But it doesn't mean I don't want to go 100% into value. It just means if before I was 70% growth and 30% value, now I may want to be 60% value and 40% growth, right? So you make adjustments. Or maybe if you want to be more extreme, maybe 65% or 70% value and then the other portion growth. We'll see. But it's really going to be what I'm seeing in terms of setups, right? I may hunt a little bit more for value, but if a setup looks good, I don't care what it's in, right? I don't care if it's in value or growth. And I think that's how you want to kind of think about things, right? So names that I'm I'm interested are names, Etsy had amazing earnings. And I was like, you know what? It's down pre-market. It didn't, officially break out, but it just looked like a good buying opportunity this morning, right? And I made some money on it, and I kept the last portion of the trade on. Right, hit a target at 230. Starbucks value or growth? I'm not really sure. Doesn't matter. This made a nice breakout of value today, and I hit a couple targets with this. Again, hitting targets is important right now, right? You have to take some profits into growth. I had a trade on earlier this week in RTX. Somebody gave me a hard time on Twitter because I said, hey, I took my first target. Well, look at it now. I took my first target here. Somebody was like, oh, it's going higher. You don't know what you're doing. Okay, well, look at it. It's right back to my entry point. So if I want to, I could put that back. You got to put some in your pocket, especially when the market is choppy. You got to put some of that money and realize it and put it in your pocket. Have a good time. Have some whiskey. Maybe have a little bit of Oban whiskey this weekend. Maybe have a nice beer. If you don't drink, maybe you go for a run. You treat yourself to something. All right, but you got to sell into really big, strength like that. It's just trading. What else? I was looking for something in the semi variety today, and I decided to put on some applied materials. It didn't really do much, but I view applied materials as kind of one of the best in breed names. I'm also looking at Nvidia. Where did we close this thing today? Up 3%. Again, this is good. So it did close above value, 537. So this will be a name that I'll be looking at, because I'll tell you, I listened to Kramer last night with the CEO on. Sounds like pretty good quality to be in. Now, I will still, like I said in the beginning of this video, I always have ideas. The price action will confirm that for me if I'm wrong. Above 537, I want to be long. All right, so Starbucks, what else did I trade? A little bit of Crowd today too. That's one of my go-to names. That I like to participate. After somewhat of a pullback. This is not the best setup because it's not. I was hoping that it would get back above the 50-day moving average today. It didn't. I'm still wearing the position, but I know where to get out of it. Right? If this thing breaks back below the new value area 204, it'll be a loser. All right, and that's it. I even put on a little bit of spies at the end of the day, spy puts as insurance, as an insurance policy, just because I knew it was month end, right? And month end, could be crazy around the close, and that worked pretty well, right? I put that in actually on this bar. I stayed with it. I said in the trading room, I'm like, I'm not looking to do anything here at the end of the day, because it's very whippy going into end of month. Right, all kinds of like big MOC for sale today, but again, it's part of end of month stuff. All right, so that's what I traded. Some other names, I'll give you 3 or 4 other names, setups. Right, so we'll not only talk about strategy, but we'll talk about some setups. I love going back to this apps name. Really nice, right? Look at this. Closed above the trend line, turn the corner. So this will be a name to watch next week. DKNG also turned the corner, finished up 6% for the day. DraftKings, I don't have a position on this. I'm still long some Penn, a little bit more choppy. I think DraftKings actually looks better, even though I'm not in it. I talked about Starbucks already. Snap, kind of on the list, but not doing too much. CLAX, I'll tell you, what you want to do, I think, too. And by the way, I haven't said this, but the video is for information purposes only. I'm not giving out any advice or recommendations. This is education purposes only. And look at the CALX. It doesn't even look like this thing software name. When the whole group did this, oops, I typed in the wrong spot. When the whole group did this, sold off, what did CALX do? It rallied pretty darn hard. All right, so that's good relative strength right there. All right, another name that I'm watching next week is this. Again, this is developing and no position on, but EXPI has now had a decent pullback, and it won't. So I view this as an easy setup. Why is it an easy setup? Because I know where to get into it, and I know where not to. If this thing gets into the March value area, which would be above 64, then I've got a spot. And notice that will also coincide with getting above the 2 moving averages. Right now, there's no signal, right? So you gotta, like, I sit on my hands for now. Some people love to position before they get a signal. That's 50-50 whether it's going to work or it's not. I think right now, a move. I'm going to wait. This is a volatile name, right? So even if I miss a couple points, I've got confirmation that it's doing something different, and hopefully we'll be on my way. All right. So that is just a couple names, and we'll have much more in the Tribeca Trade Group weekend videos. Again, we do 2 videos, one macro video, so where we talk about price and trend, we talk about all the above the hood indicators and all the below the hood indicators and internals. And then our second video will be on our watch list. Okay, so let's review just the week's performance, which I have that up for you as well. All red. We've seen weeks before where we've seen all green. This is all red. SPY down 2.6% for the week. Again, really heavy on the Q side, down 5%. Emerging markets got hit hard. It's down 6.6%. And TLT, like I said, was flat for the week, down 0.1%. a tenth of a percent. Gold also down 3%. Interesting how many, there was areas that finished higher for the week, mostly in value. A lot of energy, right? OIH finished up 9% for the week. The banks finished just barely up for the week because they got hit a little bit too yesterday. Transports, industrials just down fractionally versus some of the higher beta areas. The blockchain group got hit hard. Chinese internets, remember, if you're a regular viewer of my videos, you know that I've talked about that this was due for a pullback, got really overbought. And I said how I'm an emerging market bull, but let's face it, this really needed a pullback, and it got one. So we'll be watching this next week. All right, and I realize the video is 30 minutes long, and I don't like to go 30 minutes in these videos, but here's the rest of your performance. A lot of things got schnockered. All right, so guys, have a great weekend. Realize that this is a part of trading, and again, this is how you improve. So if you got through it and you managed to get through it decently without giving back a lot of your gains, you're doing well at this. If that wasn't the case, then you have some things to improve on because it can be done, right? You just have to be a disciplined trader. I would say too that there is an abundance of option trading. You have to know when trading options is appropriate, right? When we're trending, right? When you're going with the grain, or what I like to refer to as, what we like to refer to at Tribeca Trade Group, because I know a lot of traders mention this, and I'm borrowing it from somebody else. But we like to trade options when the wind is at our back, right? When it's a choppy market, in terms of going long options, right? Long deltas. We like to do that when the wind is at our back, right? What I've learned, and it took me a while to learn this with options, is to try to avoid, especially short-term options, when the market is not in your favor, right? Everybody talks about that you could make a lot of money in options. You could also lose a lot of money in options. It happens very quickly when the market is not in your favor. So those are the adjustments that I've made over time, and it took me a while to learn that, to get out of to trade less and less options when the market becomes a choppy mess or when we start to go down, right? And I'm talking about on the long side. On the short side, you could actually make some money on the short side when the market moves down with puts, right? Some traders did that very well yesterday. Congratulations to them. All right, guys, that is it for the week. And my quick endorsement, this is how you become a member. And these are things that we go, I spend a lot of time. I am much more vocal when the market has some volatility to it and where there's something to do. I'm quiet when the market is just trending higher, right? It's easy, or it's easier. But really, I give a lot of traders, I really try to help a lot of traders out when the environment gets more difficult, right? So it's funny because I see some people on Twitter, they go radio silent when there's a little bit of volatility. I'm more the opposite, right? I think that it's more attention should be paid to when the market is doing, when the market begins to change directions, right? There's a lot more adjustments and things that you need to do when we start to kind of break trend a little bit in the short term, or have a dip, have a correction. And that's how it is, right? And I think that, so you'll see me talk more about things, and I've got my own system to kind of spot when we are finally kind of getting through a dip. But yeah, I never understand. Some people, they go radio silent when just with a little bit of volatility. So it's kind of funny how that works. All right, guys, have a great weekend, and I'll see you on Monday.